Let's talk about markets and where we're headed. Alok, Ranjan, Head of Equity and Senior Fund Manager at ITI Mutual Fund, is now with us on the show. Thank you very much, Alok, for joining in. We often speak to Rajesh, so it's good to see you on Closing Bell today. So you track you manage the large cap and the large cap mid cap fund at ITI Mutual Fund. And I was just looking at your large cap fund. It's fairly diversified. You've got about 65, 67 stocks in your holding, well spread across financial stocks, consumer, you've got autos, you've got, IT heavyweights. I mean, what's the broad call that you're taking at ITI now in the markets for the next 12 to 18 months and the sectoral composition of your portfolio?
Thanks, Reena. So to mitigate the risk, we need to be diversified. And whenever it is large cap, you know how the movements happen. So typically large cap stocks would have 60 to 80 stocks in portfolio. Of course, sectorally also we are diversified because in the last 1 year, if you see how the markets have moved, there are no clear outperformers, and definitely, one has to be bottoms up because market is not decisively very attractive. It has not corrected very significantly, and most of the correction has been time correction. And as far as valuations are concerned, now we are almost fair valued or maybe a little bit more attractive than fair value. So that is how we are going to see. So that is what we see in our portfolio. We are invested pretty much across sectors. Of course, there have been pockets of overweight and underweight concentration.
So to beat the index returns and to generate that alpha, because you are broadly diversified, how do you intend on doing that? What are your big overweights? What are your big underweights? What is the call that you're taking?
Right. So you might have seen in capital goods stock, we have remained overweight, especially during last 3 to 6 months. So whenever you have to do bottoms up investing, typically capital goods sector is a very, very wide sector. It has got several pockets. So there are pockets of defense, there are pockets of power T&D, and then there are pockets of basically industrials. And if you are overweight that, then select stocks in those sectors have outperformed. Then automobile, most of the industry was underweight, but you see how things have happened in the last 3 months. The government has given some incentive, and the sector was doing so badly that government has to come up and do something. And now we have seen how auto stocks have done in the last 3 months. So that is pretty much also reflected in IT sector. Things have not gone well for the IT sector, but now we have started coming to a stage where it may not look very good. At the same time, valuations have also corrected quite significantly. So maybe the underweight extent has to reduce, and slowly we need to go around equal or something like that.
Okay, all right. Hi, Alok. Good to speak to you after a while. Nigel on this side. Alok, how do you approach the consumption basket? The street seems to be divided. Some believe that some of these staples haven't done anything, maybe a case for review. The counter argument is they're not going to grow much, so why to look at them? You rather go for the discretionary names. How are you all positioned on the consumption names?
So again, you see consumption has several pockets. So if you see staples, it's true that it has corrected, and it's true that government has given some incentive. There have been tax deductions, extra money in the pocket of consumer, everything is fine. But at the same time, if you see how the companies are growing, companies are typically struggling with 5% volume growth also. It's very difficult for them to achieve that. So in consumption, if you see staples, we are not gung-ho on that, and there we are underweight. At the same time, if you see consumer services and consumer discretionary, we are quite overweight there, and that is where we are quite optimistic and bullish.
All right, so you're bullish on consumer discretionary, not so much on staples. What about the auto pack? And, as we move towards post-monsoon, what would you say of cement? Do you think that, infra demand will pick up, that will cause some price hikes in the cement business, volumes? So on cement and autos, what are your thoughts?
Right. So if you see auto, entire industry was almost, there was a consensus underweight. And everybody was expecting autos to do badly, but then came this GST incentive. And if you see auto numbers, they have not been doing well for the last 5 years, 7 years. In fact, in some of the automobile sector, you'll see that number. in absolute terms, they haven't grown beyond 2015. So for the last 10 years, there was a build-up in demand, but at the same time, industry was not doing that well. Now with this kind of incentive, you must have seen, comments from several companies. I cannot name those companies, but you see all the large cap auto companies. The numbers are extremely good, and this is something that is going to continue. And the same is also reflected in the, you see, automobile index. It's high for the year. And all this has happened in the last 3 months. So that is why we need to be fairly diversified. At the same time, the top 3 or top 4 large cap stocks, they are going to do quite well.
Okay, all right. Just a quick question on the cash levels that you all are sitting on, Alok.
Cash would be typically 2 to 4%. That is what we typically maintain. We don't take, as a policy, as a house, we don't take large cash costs because that can create extreme volatility in the portfolio performance. So we think pretty much we are invested, but 2 to 4% cash generally we try.
Fully invested. Got that, Alok. Good having a short but effective chat. We have lots more questions for you, but that for another session. Thanks a lot for joining in. Well, for the time being, I'll tell you what, I think we should